Hey everybody, welcome to this weekly wrap-up. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. What a day today, folks. Usually a very quiet day in the markets ahead of the three-day weekend here in the US, but that was not meant to be. What we saw is the PCE data coming out exactly, almost eerily, almost a little bit on the shady side, exactly in alignment as to not ruffle the feathers of the market. But ultimately, it was Marvell earnings in the semiconductor space and Alibaba, a Chinese company that came up with a new AI chip that will rival those by NVIDIA that caused the semiconductors to have a big sell-off. And as we know, where the semis go, the market follows. All right, let's take a look here at where the S&P is on an intraday basis with just a couple minutes to go. You can see again, we opened slightly lower today. Big sell-off for the first 40 minutes of the day, and then a lot of sideways chop into the close. Now, again, this pattern looks to me like a bear flag, although, again, with the market closing, you just never know if it will continue with downside on Tuesday. Notice I'm saying Tuesday, folks, because, again, if you are not in the U.S. markets are closed on Monday in observance of the Labor Day holiday weekend. All right, so going back to the charts, what we saw today was a down day of about 0.75% on the S&P 500. We are still stuck within a wedge pattern, which again is a consolidation, tightening, kind of like a pressure cooker of a chart pattern. And ultimately, I use the term pressure cooker on purpose because whichever way we break is usually a big move in that direction. Now, again, what we're watching for is, do we come down and test this yellow line next week? If we do, the odds would favor a breakdown at that point. So watching very, very closely here on the S&P. But again, nice little down day. It's keeping us, though, within this range. However, look at this, guys. Look at the NASDAQ 100. The NASDAQ 100 hit its parallel trend line lower trend line here for the fifth time. Notice again, hit number 1, 2, 3, 4. 4 created the bounce this week until today. We are now hitting it. Now, it doesn't look like we're going to close below the line, so the line is holding, but keep in mind that the fifth hit of a trend line like this favors a break with a 60% chance. So it's not overwhelming. It's not like it's a guarantee. There's no such thing as a guarantee. It's only slightly better than 50-50. If, and I repeat, if we were to bounce next week and then come down again for the sixth time, the sixth hit would favor a break with a 70% chance. So again, every hit following the fourth hit is 50-50. The fifth hit is 60-40. The sixth hit, 70-30, et cetera, favoring more and more of a chance of a breakdown. Now, one other thing I'm keeping a close eye on. Do you guys see what pattern is forming here? To me, this looks very eerily like a head and shoulders pattern, potentially with a move like this. And so again, doesn't mean it's going to play out, but we do want to follow this sort of pattern formation that, again, is appearing on the NASDAQ. We're also seeing it, by the way, on the semiconductors, the SMH. Take a look at this. Now, listen, we still have to come down here and break the neckline to trigger this pattern. But to me, this is a pretty obvious head and shoulder pattern formation that could set up for a bigger correction in the semiconductors. And I want to just go back to this, folks. So you had MRVL earnings, and we're going to look at that chart in just a second. But MRVL getting absolutely annihilated today. Big drop in that basically $75 billion company. That was one extra straw on the camel's back, right? So we saw NVIDIA. NVIDIA reported on Wednesday after the close. Thursday, the stock opened lower. It rallied to the flat line and then closed like 1% lower. But the key to NVIDIA's earnings, and I think this is more important than investors are letting on, is that they missed on their revenue for their data centers, okay? So you have a little bit of a small sign on NVIDIA that things might be slowing down in the data center side. Then you get that later that day, after yesterday afternoon, after the markets closed, you got MRVL to have horrendous earnings, and that was bad. Then Dell also had a little bit of weaker numbers there. And all of a sudden, it goes from a small kind of blip on the screen with NVIDIA to now a multiple factor here with more and more of these companies reporting earnings that, again, maybe don't meet the lofty expectations that we're all used to it. And then the straw that broke the camel's back, Alibaba. In fact, let's jump back to the charts and take a look. Alibaba surging up 13% after announcing a new chip that again could be rivaling some of these bigger technology numbers or companies. And I said this morning in the game plan, in my trading game plan, but anytime you have a company or companies that have 60, 70, 80% margins on a product, every other company out there is coming for their lunch because those margins are so hefty that you're going to get competition. And we know China, again, there's been security concerns about can the US sell, et cetera. So they're even more motivated. And now they might have a chip that can rival it. And that, again, brings me back to earlier this year with DeepSeek, which, again, turned out to be a non-event, but it did cause about a 50%, 40 to 50% sell-off in NVIDIA. And I think that's something that we have to remember in this market environment. All right, back to the charts we go. Taking a look here quickly, the dollar today ever so slightly lower. It did not confirm a breakdown. So again, it's still an unconfirmed breakdown, which is kind of keeping us on our wits, monitoring this. But again, it does look like it's trying to break lower here. The 10-year yield up just a little bit. So the 10-year yield gained a little bit of traction. Now, you might hear in the mass media that the PCE was the reason for the breakdown today in the markets, the sell-off, with the NASDAQ down 1.25%, S&P down about 0.75%. Nonsense. That's nonsense. And the reason you know that's nonsense is because if the PCE was the cause of the major move down in the markets, you would have seen a bigger reaction in the 10-year yield and in the dollar. The fact that the dollar and the 10-year yield were virtually unchanged for the day tells us that it wasn't that. It was the semiconductor news from Marvell's earnings and Alibaba. And that's just the nature of it, folks. The charts tell the truth. All right, here's your MRVL chart. Take a look at the drop today, down 18.6% on MRVL. I will be monitoring this next week for a potential trading opportunity. I have a good level, and I highlighted this morning. Once you get down to about $59 and change, there is a good technical level there, so I will keep an eye on that. We already talked about Alibaba, but just going back to that chart, I showed this morning. This down move here, this up move there, and then what type of pattern is this formation? This would be a bull flag or a cup and handle formation. It's a bullish pattern. It tells you that likely you're going to get a big move. And what does Alibaba do? It shoots to the upside. In addition, earlier this week, I highlighted the K-Web as one of my favorite trades on a breakout, and it looking really good having broken out here. I do think this continues higher. So I think, again, money flow likely going to come out of technology, probably go to defensive names in the U.S. and outside of the U.S. into foreign equities. All right, couple other things here. We have to talk about this stock. So this is Affirm Holdings, AFRM. This morning in my trading game plan, I gave this trend line to short. I said, guys, day trade this. This is going to be a good level, 93.25. It went up, it pierced it. We actually got this trade in the live day trading room, and look at the fall on this thing, closing back around $88. That's a $5 drop, or over 5% from the level that I gave in the morning my trading game plan. All right, so beautiful move there. The technical level told us that, and I even found this other trend line that reinforced it. Look at this trend line right here. It literally connects the major pivot high from 2023 to the major pivot high from 2025. And look at where we went right there. And this, my friends, this in technical analysis, this candle, this is called a topping tail. It is a bearish reversal signal, most likely marking a high pivot or high for the cycle on Affirm. Now, the other thing to just bring up, and I mentioned this morning when we talked about Affirm, is that anytime you see the stock, and Affirm was up still, even with the reversal, up 10.6%, but the fact that a buy now, pay later stock is having remarkably good earnings, to me, is a red or yellow flashing light that the economy is starting to struggle more and more. So just something to keep in mind. Listen, if everyone was doing great, would people really be doing buy now, pay later and paying an interest rate to be able to pay in installments? I would say no. It's telling us something about the underlying health of the U.S. economy. All right, couple other charts here to go over. We got to touch on NVIDIA. NVIDIA down 3.25% today. Look at the trend line. I choreographed this for you guys a couple weeks ago. I said, when this trend line breaks, you'll get the break. Then we got the retrace, and now it's starting to make its way down. This break of this trend line, and I always refer to this and say, guys, it's called a trend line because it has trend in it, right? It's the trend. And so once you break the trend, then the trend is broken and you should see further downside. And I'm still on the case that I think that with margins falling and competition going up, eventually Nvidia has a lot of downside. My first target's down to about 153, which was our former major pivot high. All right, so that's interesting there. Again, we saw mostly red out there. Names like Tesla down 3.5%. Now, Tesla's an interesting one because we had this wedge pattern breakout, retrace to the scene of the crime, and then it rallied higher. Now it's coming in again. Now, listen, it only gets kind of dangerous for the stock if it breaks below this 310 to 308 level. But still, you can see how the market can influence even a stock that's strong, that's broken out. It's still struggling here on a day like today, dropping 3.5%. And again, we saw Apple fractionally lower, Google, Alphabet actually green, Amazon down, Nvidia, Tesla, Netflix took a hit today, and really all of the semiconductors took hits across the board, while the financials were the one shining light in the market. And by the way, JP Morgan, a financial here, you can see this. It's coming back up to some big resistance right up here. This is going to be on my list to short next week should it hit this 305 level. 305 is going to be a big level there. Bitcoin. Rolling over. I told you guys that once this trend line would break, or if it broke, then you would be in some trouble and Bitcoin could continue down. That's exactly what has happened. And I'm still in the camp that I think you'll have a little support around this pivot around 105,000, but really it's probably headed to 100,000. 100,000 is going to be a big technical support level. All right, so we'll watch that. But again, Bitcoin down another 4% today, folks. A nasty drop on that. And ultimately, again, you saw the beautiful double top right here. It pierced and then came back in. This candle is a candle I highlighted. If you know technical analysis, anytime you make a new all-time high and then have a nasty red candle that engulfs the previous green, so see how much bigger it is and closing even below the low of that previous green candle, that is a bearish reversal signal. And you can see what happened. It came down and even just took out this trend line very easily with a couple bounces along the way. So again, in general, I'd be looking for Bitcoin to get bounces at key levels like the 105,000 point, but I think it might be headed down to 100,000. That'll be a major technical level. Gold today continued to rally up. Now, the kicker on gold is this, is that it's getting closer and closer to testing its all-time high, which happens to be this longer-term trend line. Now, using technical analysis, the way you would view this is this will be major resistance until proven otherwise. Now, I'm hopeful that it's proven otherwise because I have some longer-term holds on gold, but I still have to respect the chart. And the chart tells me that this 3480, 3500 level is going to be big resistance. I want to watch and see how it behaves next week when we go into that level. So keep an eye on gold. Again, near term, kind of a mixed bag, still generally a little bit negative unless we get through this level. Longer term still looks amazingly good. Now, silver today, look at the move on silver today. Beautiful push up. I've talked about how this is your big level right here. I said $40 would be resistance. Where did silver stall out today? Right here at 40 bucks. Now, again, it's not to say that it can't get through this level. It very well could, but we still have to respect it and watch here. This is the battle, right? If you're looking for where price battles, in other words, where do bulls and bears fight it out tooth and nail, this is your level here on silver. So monitor this. Let's see who wins the battle here. If it breaks above and confirms, then bulls win. And it probably goes to $48 to $50 per ounce. But again, if they don't win, you could have a decent sized pullback. We'll cover those levels next week. All right. A couple other charts here to go over. We have the oil chart. And oil, again, not doing a whole lot, remaining basically stuck between this upsloping line. Interestingly enough, I'm using this upsloping line because I still think we could get one more push up in that. But if you look at why it stalled out shy of that line, look at this. Just take your low here, drag that line across, and it goes right through there. So even if you remove this, just to show you the level there, look, lows, bounce, breakdown, and then it hit, and that's why it stalled out right there. Pretty cool, actually, just to see how that works. But I still think it could make one more push up into that key level. All right, and then natural gas here, guys, nat gas, today, continuing to push above. It has now confirmed above this $3 level, which is very short-term bullish, with a move potentially to 317 to 322. This area right here, in fact, I'll show you guys on the chart. You take this area right there and you push it through. Notice how on a technical basis, you have a low pivot, and then we flip it around, and we have all these highs along here and right there. And so that tells me that, again, right around 318, 320, 322, that will be a big resistance. Now, would it be shortable to me? It's not a big enough extension move for me to actually look for a swing trade short. It's not that the level won't be good, but in technical analysis and as a trader, you have to make an analysis point of deciding what's your risk to reward, right? So, like, you could have the greatest setup in the world that's like 80% success rate, but if your reward is like this small, but you're risking like this much, it doesn't really make sense, even at an 80% success rate. So you really have to look at the two sides of the equation, both the risk versus reward, plus the probability of the setup, and it has to make sense on both fronts. Lastly, folks, I continue to be a big fan of the VIX. The VIX, my friends, this is the play, in my opinion. If we go to the VIX, it was up today. The VIX, again, getting a small bounce, 7%. It is so low on the chart with no fear out there that this could be the recipe for upside. And what I like about this, we were just talking about risk reward. There's very little risk here. Yes, it could go to 14 again from 1550, maybe even 13. But when the VIX takes off, look at what it did back in during Liberation Day. It went from 17 to 60 in a matter of a week. Now, that's not going to happen again unless we have something catastrophic happen. But even if you just get one of these pops, right from here, it was 17 to 25. That, to me, that risk reward, I mean, even just bouncing up to this 2021 level is very good when you have support just below on the VIX. I personally have a position in the VXX, which is, again, the ETF that tracks the short-term VIX futures. And again, by the way, never hold this long-term. It always eventually goes to zero. It's only a short-term, like, let's say a few weeks to a couple months type hold. And then you want to get out of it because, again, it does have degradation as the contracts roll over the course of a longer period of time. All right, guys. Wow, what an end to a week going into a holiday 3-day weekend here with verified investing. But I love that the charts are our guides. Now, they're not going to be perfect. I certainly am not perfect. But with the charts, we make probability-based decisions. Like I always say, you want BS, you go to the mainstream media for narratives, you go to social media for hype. If you want probability, meaning odds-based decisions, the charts all the way. You guys go have a great weekend. Again, game plan, my trading game plan won't be on Monday because the markets are closed. We'll get right back to it on Tuesday. You guys have a great one. Thanks so much for tuning in. Take care.